Hello everybody, today is Saturday, September the 20th, 2014. My name is Michael Wright, and this is the weekend Elliottwave video. Just before going forward, please do pause the recording and read over our risk disclaimer. Alright, so let's jump right into the markets. I'm really going to place a lot of emphasis on the yen crosses, and mainly let's take a look at the Kiwi yen. Firstly, as of now, Kiwi yen has rejected the 161.8% Fibonacci extension from the highs. Okay, this bodes well for shorts. It bodes well because that is indeed a major turning point. Okay, and if we look at a fib, let's see if it coincides with a fib as well. And yes, it does. It also coincides with the 78.6% Fibonacci retracement. All right. That in itself is two major pinpoints. I do like shorts, and we'll be taking a short at the open with a stop at 89 and then a target price of around 87.50. Okay, that gives you 100 points lower with the next critical support zone. Okay, from there, just gonna see how prices develop. If we do indeed play out this scenario downside, we have a bounce and then later on get a downside breakout, I would look to re-enter that trade, looking for additional losses, possibly in towards the 82 81 area. Okay, looking at this from a larger A, B, then another C move lower, or even this recent high, and then looking to play out targets. If we do break out of the ladder, then this will be the ideal move here. Okay, but first I want to see it come down to support. That'll be the first indication. I want to see it respect the support zone, have a short-term bounce, and then break out later on. We'll see how that breakout plays, and then if it does make that move, then I'll be looking for a bigger downside target zone of a double bottom of 85.70 with later on of 83.50. All right, so I'm looking first at the Aussie yen, at the Kiwi yen, and then thereafter we'll be looking at the Aussie yen. Okay, Aussie yen, from a price action standpoint, had that topside break, so it looks you could play both sides. Okay, as of now, I just prefer the Kiwi yen. Is not as, let's say, contradicting as the Aussie yen. All right, but in either case, though, another support zone not too far is the 97 marker. Okay, if we open up this time frame, we see that here the highs, there's no real topside divergence, so I'll be cautious. What I mean by divergence is if prices make highs, I would expect momentum to make new highs, so we haven't really seen that. Okay, but in any case, though, I do like that downside for the Aussie yen. Okay, nice pullback retracement, breakout, etc. With that being said, let's look at the Aussie Kiwi right now, right? Because we're expecting Kiwi losses. Aussie is sort of playing sideways price action. Here on the Aussie Kiwi, we already had this breakout. This would have been a nice short. This is a clean short, actually. Let's open up the time frame. That was the 4-hour. So if we open up the time frame to the daily, okay. All right. No real indication, so I'll stick aside. I'll just wait to see how price action develops. If prices are not that clear, I don't want to force it. There are just usually so many other pairs to trade that is really not a necessity to for certain instances. Okay, here this dolly, and we were looking for shorts a little while ago. Obviously, that run up did well, but that's why you play shorts. Okay, shorts always bode well for certain cases. Looking first for against those highs, but never really played out in that instance. Looking at the Japanese yen futures on the other case, broke that momentum to the bottom. All right, but from a price action point of looking at the Elliottwave extensions, we have the 261 not too far away, with the RSI well below 30, indicating oversold territories. We look for a bounce. Bounce may be shallow, but in any case, that bounce may provide and give a color to the Kiwi yen trade that we were looking at earlier. Okay, so I do like yen for a possible bounce, and that will give the Kiwi yen some life. And then also looking at the Kiwi dollar trade, Kiwi dollar also still to the downside. We broke some key levels here. This is probably the most divergence we've seen in quite some time from the Kiwi. A 5-wave decline into an A, to the back test, to the B wave, and then a further sell-off. With the divergence, we will look for a bounce, and are looking for a bounce. And with the Kiwi dollar and Kiwi yen diverging by the ways of the dollar yen, we look for a move above 82. As long as we get above 82, we then look for the 85 area. All right, so that's ideal. 85, because this would be the support turn resistance, and then a whole reversal back to the highs will then pave way for a move of about 300 pips. All right, so as of now, from an Elliottwave standpoint, just prefer the Kiwi yen for shorts into the open. We'll be doing an Ichimoku Kink, Ohio later on today into tomorrow. So members, you could just sign into the members area and look at that for a trade setup. All right, everybody. Thank you so much for watching the Elliottwave outlook for the week ahead. If you have any questions, please don't hesitate to Skype me at wtcg.mike, or you can go onto the site. We also have a Forex chat room open to the public as well now, so you can go in there and also write your comments there, or send us an email to info@globalfxclub.com, and we will respond within about 24 hours. Cheers, everybody, and good luck trading.